Hi guys, Willie Mandrell, the Mandrell Company, and today I just wanted to share with you 4 reasons why I believe Boston real estate is a much better investment than investing in the stock market. So we'll get right into it. Reason number one, Boston's just a great real estate market. Boston has some of the best hospitals, some of the best schools in the world. People come from all over the world to be in Boston, to attend these schools, to work at these hospitals. It's a great job market. And with that, with those good schools, you have a constant influx of new residents, a constant influx of new people who need housing. So with that, you have a supply and demand. There's a strong demand for housing, and Boston's a very old city. There's not much new development here. There is actually in our current year, but overall, there's not much space left to build. So you have a limited supply and a strong demand and a strong influx of people coming in. So it's a great real estate market to buy in and to already own in if you are a landlord currently. Number two, the stability of real estate. Real estate is a lot more stable of an investment than the stock market. You have a lot less fluctuations, a lot less volatility. You're not going to wake up tomorrow morning, look at your real estate portfolio, and find that it's dropped 25% because you were too heavy in one home or another. Where that could be the case in the stock market. You could be too heavy in one stock and find out the CEO is doing something crooked, and all of a sudden that portion of your portfolio that stock has dropped dramatically and has affected your portfolio significantly. So you won't find that. Just stability of real estate. People are always needing a place to live, and it's a limited resource. It's a lot more stable. Number three, with real estate, you can force the appreciation. You can't do that with the stock market. So you can go in real estate and you can increase the rents. You could look at the market rents and determine that you are going to offer something a little bit better. You could go in and offer some new amenities and increase your rents over time. You could do that yourself. You do not have to wait for a company's performance that is within your control to do that. You can also make improvements to the building. You can put a new roof on the building. You can add new windows. You could, again, add amenities that were not there and force the upward value of that asset, ultimately increasing your value within that asset. So forced appreciation is number three, the ability to increase the valuables asset. Increase the asset of the value of the asset. And number four, real estate pays me in 4 different ways, or can pay you in 4 different ways. With the stock market, you typically are looking at appreciation, and occasionally you have a dividend or some type of earnings coming from the stock. But that's usually on a quarterly basis, more often on an annual basis. With real estate, you are getting paid in 4 different ways. Number one would be the appreciation of the property. The value of the property over time goes up. Number two would be the debt pay down. As your tenants pay rent, a portion of your mortgage is principal and a portion of it is interest. The principal part is you paying down the debt on the property, which ultimately increases your equity within the property. Number three would be the cash flow. Your property has income and it has expenses. Assuming your income from that property exceeds your expenses, you have cash flow, and that is monthly cash that you are putting in your pocket. And last but not least, the fourth way is the tax benefits. The tax benefits now are much greater than what you would achieve from your stock portfolio. Just the ability to write off certain expenses, to be more specific, travel expenses that are related to your real estate portfolio, common expenses between your home and things that you own in your rental property. So, in summary, 4 reasons Boston real estate is a much better investment than the stock market. One is Boston's just a great real estate market altogether. Two, the stability of the real estate market, the lack of volatility. really that you have, or not lack of volatility, but just it's a much more stable market than the stock market. The ability to force appreciation, the upward value of your property, and then last but not least, that real estate pays you in 4 different ways, opposed to the 1 or 2 that you receive in the stock market.
Thanks for watching our video. Did you find this information useful? If so, please remember to like this video and subscribe to our channel for more helpful videos. I would also encourage you to share this video with your friends and your family. Thanks again for watching, and we'll talk to you soon.